And this is what will happen. All of a sudden, there's no more Bitcoin. All of a sudden, everyone wants it. And then the price like literally teleports. We've seen this in the past and will probably happen this cycle again. But where is it going? Now, the short answer is I think it's going up. And the long answer I'll explain now. I think it's going up, and I think it's going up a lot. There's your teaser for the video.
Hello everyone, welcome back to another FinMeUp deep dive. Today we'll be talking about Bitcoin. Now I know that some people might love this video, some people might hate this video because it is one of those topics, but we are going to try and give you just lots of insights for you to better understand what is Bitcoin and what is busy happening. So Paul, to start off with that, what will we be discussing in this first video, because we are planning a few.
Yes, so Higgo, there's a lot to talk about. I mean, we can talk about this for hours. So I decided I'm going to make 3 different videos. The first one will be, what is Bitcoin and how does it work? But I think many people already kind of know that by now. But for those who don't, I'll explain how it works, what's the goal of it, and so forth. The second one is, where's the price? In our opinion, we can discuss. What do you think? What do I think? Is it going up, down? Are we going to the moon, or are we going to the ground? And then the third one will be crypto arbitrage. I know you and I both dabble in arbitrage. It's basically a little to zero risk strategy where you can make a lot of money with minimum effort. I'll explain that in a separate video. But today, the one that's most relevant, I guess, before we go on holidays is, where do we think the price is going? So that will be the first video, and then the other 2 we'll do in the new year.
Perfect. So let's talk about price. We know that the price of Bitcoin is mostly determined by supply and demand. Well, basically only supply and demand. Can you give us some context on that?
Yes. So Bitcoin, much like commodities like gold or silver or so, is basically purely determined by demand and supply. Also stocks is basically demand and supply. It's not about what the actual value is. And this, guys, you must understand very clearly. When you trade stocks or Bitcoin, what you think about it and what is not as important as what other people think about it, because other people collectively have way more money than you. I promise you that. So it's about the perception, the perceived value. If more people like it than not, the price will go up. If more people think it's going down, they're going to sell and the price will go down. That's how it works. So where is it going? Now, the short answer is I think it's going up. And the long answer I'll explain now. I think it's going up, and I think it's going up a lot. There's your teaser for the video.
Okay, so we spoke about demand and supply. What are the drivers of demand and what are the drivers of supply?
Yes, so let's start with demand. So firstly, number one, and John, they can boom on the screen, is the interest rate cycle. So as you know, in macroeconomics, interest rates are basically a leading indicator or a coincidental indicator of what's happening in the economy. Normally how it happens is inflation goes up, there's a recession, something happens, inflation goes up, and now we need to combat inflation with interest rates. The moment interest rates go up, the economy starts to struggle because everything is already expensive. So people are paying more for groceries, for petrol, for everything. And also now, if interest rates go up, their debt is also very expensive. I mean, think about people who bought houses, for example, and cars in COVID time when interest rate was so low, deal of a lifetime. 2 years later, the debt repayments on this is massive. So normally how it works is, if interest rates are high, economy is struggling. If interest rates go down, economy is recovering and asset prices rise. So if interest rates go down, property, bonds, stocks, cryptocurrency, everything will shoot up.
I'm bumping away.
Now, so the question is, so where is interest rates going? Now, as you know, this year has been some of the highest interest rates we've seen in a long time. Next year, inflation is now cooling down. So next year we should see, especially in America and maybe even in South Africa, interest rates start coming down. And it is also an election in America. So normally in an election, like we say in Afrikaans, die myne moet nou gat kruip. They're going to start stimulating the economy, making promises, whatever, and interest rates will come down. And if interest rates come down, asset prices will go up. And what normally goes up first, or the most, is the tech stocks and high-risk assets such as cryptocurrency. So if it's going well, the high-risk stuff goes ballistic. And if it doesn't go well, like we saw like 2 years ago in 2021, the assets that go down first and the most and the hardest is the exact same assets, tech stocks and cryptocurrency. So I feel that interest rates are coming down, and this is a great opportunity for anyone to invest in risk on assets. Right. The second one, John Day, boom. is the Bitcoin ETF. Now, how this works, Higgo, there's many ETF applications happening in America at the moment. BlackRock, Fidelity, Vanguard, all of these places, Cathy Wood's ARK Investments. What is happening at the moment is guys like you and me, the retail investors, the guy on the street, we want to invest in Bitcoin. What do? We open a Luno or a Valor account. We go to Easy Equities and we buy the EC10 and so on. But if you go to a rich guy today, the Umis in the Zalza and these guys, and you ask them, you tell them about Bitcoin, how does it work? Now they want to buy. Now you tell them, no, you must open an account on Luno or Valor and then do two-factor authentication and then go on the order book and then place a buy order. They're going to be like, firstly, what the hell is Luno? I don't know what that is. And that, I mean, I've heard about something in America, Binance and FTX collapsing. There's no way I'm going to do that. So the guys with the money, remember, we're not the guys with the money. The guys with the money are 45 years plus. They have the wealth. They want to dip their toes into this new thing. There's also FOMO because they see it's going up all the time, but they cannot do it in a safe way. I'll tell you what they want to do. They want to go to Alan Gray. And I say, Alan Gray, can I buy Bitcoin through you? I know it's safe. All of my other investments are at Alan Gray. How do I do this? And then Alan Gray says, I cannot. BlackRock says in America, the Alan Gray version, we cannot do it. But now you can, almost. So in January, it looks like there's a bunch of different ETFs that's going to be approved. And what this does, it is allows the big boys to dip their toes or like jump into the water in crypto, in Bitcoin specifically, in a safe way. And maybe one thing I can explain is how an ETF works, guys. It's not a tracker. It's not like, okay, now I buy this thing at BlackRock and now it tracks the price of Bitcoin. Now my money goes up if Bitcoin goes up and so on. What an ETF does, or how it works, is as follows. BlackRock makes this ETF available. Now you as the investor, you go and you buy the ETF, almost like a stock or a fund, not a normal fund at BlackRock. You buy it, then BlackRock will go into the actual market and buy the Bitcoin and hold it for you. So it's almost like you own it indirectly. So as long as if you buy 1,000 rands worth of Bitcoin, worth of ETF, they have to have 1,000 rands worth of Bitcoin in the, so to speak, digital vaults. Almost like gold. If you go on Alan Gray today and you buy gold, 1,000 rand worth of gold. It's not like they come to your house and deliver the gold bar. You buy the gold and then they hold the actual gold. That's how it works. So what will happen here, Higgo, that's our long story short, is that this will make it easier and accessible for the big boys, the institutional investors, to start investing in Bitcoin. And in my opinion, it's just going to open the floodgates. Because now anyone can invest through Alan Gray or BlackRock in this case, and the price will probably shoot up, not a little bit, a lot.
You know, before we touch on the supply, I just want to ask a quick question on how much of that do you think is factored in? Because all of these things are expected. Everybody's expecting the rates to come down, the ETFs to be approved, and also the Bitcoin halving. How much is priced in and how much do you think is not yet priced in?
Yes, I think both of those demand factors are priced in by the retail investors for sure. I mean, everyone knows that the interest rates are coming down. So it's not, when it happens, it's almost like buy the rumor, sell the news vibes. And the same with the ETF. But the big difference here is everyone knows about the ETF. Everyone, at least in the Bitcoin space, knows about the ETF. And this massive rally, I think is mainly due to the ETF. But the thing is, the ETF is not available yet. So the big boys cannot invest yet. So yes, of course, I think it will. Like, I don't have a crystal ball, but normally how it works, it's buy the rumor, sell the news. So you would think that the moment the ETF lands, that there will be a massive spike in price. But actually the opposite is more likely to happen because everyone is building hype. Now the ETF is available. Now everyone takes profits and it dumps a little bit. Let's say from 48 down to 42, something like that. That's what we see. We've seen more in history. But who knows? Because the moment that thing is available, people start clicking on that. It can also shoot up. So I don't know, but historically at least, the price will cool off a little bit the moment that thing is announced.
I expect the same. I think, as the news comes out, it will probably go up a bit and we'll probably see a pullback. But once again, no crystal ball. But what I have realized is when I've been speaking to, older people, some of my mentors, some people with money who does not own Bitcoin yet, like when I ask the question, if there's an ETF available, because I know they invest in ETFs. If there's a Bitcoin ETF available, will they invest? And majority of them said yes, because then they don't have to worry about all the mechanics that you mentioned. So it's going to be very interesting. And obviously they first need to be approved, So we spoke about the demand, what drives the demand, and this is a demand versus supply conversation of the price. What determines the supply?
Yes. So the two main factors of supply, firstly, like you said, is the halving. So how the halving works, guys, this is a technical thing, so I'm not going to explain it exactly, but every day there's new Bitcoins that are released in the system. So the miners basically validate the transactions. That's how they make money. They do a job for us. They validate transactions. When they validate it, they get a reward for doing the job. And that reward is Bitcoin. Almost like it comes from gold. So think about a miner in gold. They cup. And then if they do work now, and then maybe there's a little bit of gold, and that would be the reward for their hard work. And exactly this is how mining works. You validate transactions, so you're in this whole race as a technical thing. Anyway, if you win the race, or the reward that you get for your hard work is Bitcoin. Now, every 4 years, that new reward is cut in half. That's why it's called the halving. So currently, let's say you get 10 Bitcoin for every 10. Let's say every 10 copper that you make, you get 10 Bitcoin. Now, in April next year, you only get 5 for every 10 hits on the rock. So it's basically cut in half. So the new supply that's coming into the market will halve. And the price movement historically is as follows: about 6 months before the halving and 6 to 12 months after the halving. So in other words, from October 2023 until April, that's 6 months before. And then from April, let's say, to the end of 2024, maybe well into 2025, the price historically will rocket. It will rocket. So, of course, this is more demand responding on a reduction in supply, but it's still a supply thing where the new Bitcoin just becomes more scarce. That's what it comes down.
So what is the second driver of the supply?
Yes, the second one, and that is on-chain analytics. So there's a few companies that literally make a living from providing what we call on-chain analytics. So because Bitcoin's transactions, everything is publicly available, people can actually go and like make some conclusions from this. And there's many very, very cool on-chain analytics. The company that I use mostly is Glassnode. I wish they were sponsoring this video, but they're not. But Glassnode is quite cool. You guys can check it out. There's a free version and a premium version where you get the more in-depth insights. So two of my favorite on-chain analytics when it comes to supply is one is the Bitcoin on exchanges. So what people do is if they think the price will start dumping, then they put their Bitcoin on the exchanges and then they sell it on the exchanges for dollars or for rands and then withdraw the rands to their normal wallets or stable coins like Tether or USDC. If they think the price is likely to go up over the next year or two, then they withdraw the Bitcoin from exchanges. What you get in crypto, you get like what we call a hard wallet. So basically, it's like a memory stick that you insert in your computer. You take the Bitcoin on the memory stick, and you take the memory stick out and put it in your vault at your house or you're safe. You're safe. So it's almost like on exchanges, off exchanges, guys. It's almost like money in the bank. If you feel like the bank will maybe collapse soon or whatever, then you take your money out of the bank, you withdraw it via the ATM, and you put it in your safe at your house. This is how it basically works. And that has been dwindling quite significantly. So, Jonathan, you can put it up on the screen, and maybe, guys, you can just pause the video. So, it shows Bitcoin on exchanges versus the price of Bitcoin. As you can see, there's a direct or indirect correlation. The less Bitcoin on exchanges, the higher the Bitcoin price, because the supply is dwindling. That's the first one. The second one I love is long-term hodlers or holders, but it's hodlers. Maybe I'll tell the joke sometime. I go, why it's hodlers and not holders? But long-term hodlers is people that have their Bitcoin unmoved, haven't touched the Bitcoin in more than 1 year. That now sits at a historic high at 70%. 70% of all the Bitcoin in circulation has not moved in the last year. What does that tell you? It means that people are not selling. They are holding the stuff. Some of them lost their passwords in the past. Yes, you can say that. They don't have it, they don't, whatever, they forgot about it. But 70% of them have not moved. And the balance on exchanges are dwindling. This means only one thing, is that people are buying this thing, most people, they're keeping it, they're not selling it, which means that if enough people join the system, that Bitcoin supply that's left will also be taken off exchanges or just held on exchanges but not selling. And the price, what we call it a supply shock or a supply squeeze. And this is what will happen. All of a sudden, there's no more Bitcoin. All of a sudden, everyone wants it. And then the price, like, literally teleports. We've seen this in the past, and will probably happen this cycle again.